Bitcoin is whipsawing, and whilst many are running scared, there are signs this bear cycle could be short-lived. Let's jump in. Hi, I'm Paul with ArcisFX with your Bitcoin update for the week. Stick around until the end for this week's summary of key levels to watch to inform your trading. But first up, will Bitcoin's next bear market, most likely in 2026, be longer or shorter than previous? Let's jump in. So this is Bitcoin monthly log scale chart, which is essentially highlighting all of the previous bull runs and all of the previous bear markets. Corresponded quite nicely with the stock RSI and the regular RSI, the traditional RSI, with these clear reversal zones which keep repeating across multiple cycles. As you can see here from the bull run in 2016, Bitcoin essentially bottomed out on the RSI just below the median line, which has helped form this lower diagonal support, which has been in place and intact, well, since Bitcoin's conception, really. There's this yellow line. You'll see that the price action then begins to consolidate and then recover until we reach this top line, and then the process repeats. We then have a move downwards on the RSI, and then once we hit this trend line, this diagonal trend line, this was December 2018, Bitcoin then starts coming to life, and then we have our next bull run, which then started to peak in early 2021. Now, we did have a kind of double top of sorts with the previous bull run, but ultimately you can see the RSI pattern remains the same, and it starts heading down after there. Now, currently, Bitcoin's RSI has not this cycle managed to reach this top area of the RSI, essentially extremely overbought conditions. It hasn't managed to do that. Now, you can argue that the law of diminishing returns and macroeconomic environment has inhibited Bitcoin getting really overheated this cycle because it's been a little bit start-stop, and you can see the price action across this entire bull run has been quite extended compared to previous and certainly on par with the 2016 one. But let's just try and figure out what's happening here. The bull run of 2022 lasted essentially 731 days, give or take. Now, here's the tricky part. Now, we did have extended consolidation in early 2015, so I would argue that the bull cycle really didn't kick off until around September that year. So that cycle lasted essentially 822 days, bearing in mind, of course, that the reason why this line is here is because that represents ultimately where we touched this line on the RSI. But as I said, we did have extended consolidation and a further little dip before that bull run started. So that was about 822 days. And then the bull run before this one peaked in 2021. That lasted 821 days. So you can see a sort of pattern, 700 days, 800 days, 800 days. And now the latest bull run, which clearly been pretty much going up all the way. Now, there was a good few months here which were just sitting pretty, but the bull market definitely started with some bullish moves in January 2023. So if we look at this cycle has lasted arguably over 1,000 days, give or take, which means this cycle has been more extended. So what does that tell us about what the next bear market could be? Well, obviously, if we look at Bitcoin as a 4-year cycle, and if the bull run this time lasted longer, then we would expect potentially that we're going to have a compressed bear market, because of course, once we start approaching the halving in 2028 again, of course, the bear market arguably has to end, and then we have to start moving upwards again as the cycle repeats. Bitcoin is very much a clock, a machine, but of course, we do have variations. As an example, the 2022 bull market was almost double the length, arguably, of the one which occurred in 2018. So there is a lot of variables here, but considering we've had an extended bull market this time in 2024, 2025, and considering that this time around there is significant institutional participation, which you can argue is what's extended this bull run, because we had a lot of fervor about ETFs in 2023, which gave the price action quite a lot of levity to move upwards, right? But now there's more professional investors, hedge funds, banks, ETFs, which may be providing more liquidity and reduce panic selling in the coming months and the next year, whilst also institutions now are buying dips strategically, potentially cushioning the market and potentially shortening the bear market and any downtrend coming from here. In addition, of course, if you look at the macroeconomic conditions, the 2024-2025 cycle has occurred amid tightening monetary policies around the world, inflation and rising interest rates. So if rates stabilize in 2026 or inflation expectations normalize, and we might get some more signals of that in December, the presumed incoming market downturn for Bitcoin could be shallower and shorter. Past bear markets have also coincidentally coincided with severe economic stress. As example, 2022, of course, the height of the chaos from the pandemic. And because previous bear markets did coincide with these severe examples of economic stress, if next year and the macro environment in 2026 is milder, what we may see, because we've had a more steady run up, we may see a quick, fast drop in the first few months of 2026, in the first couple of quarters, and then have a more controlled, institutionally driven rise which then might get us back on our way earlier than expected at the back end of 2026. So with institutional adoptions, better infrastructure and more liquidity, the bear market could be compressed. A faster retracement to lower levels from here, which could be a bit scary, but also meaning a quicker recovery and move into the next bull phase. And the fact that the RSI here has been on its way down to this lower level where the question mark is really over the last few months, so since the summer, indicating of course that we're not going to get that blow off top which we expected from Bitcoin, which is something which I think can only occur when we have more positive economic conditions in the world. And therefore it seems like Bitcoin is starting to weaken now and we're coming back down here. But the fact that we're quite close already, and you can see like at the start of the previous bear markets, we've been all the way up here on the RSI, but now we're very low down. We're almost at the median line again, which was the bouncing off point for the bull run in 2012. The RSI is giving us signals as well that we could be in for a sharper but shorter bear market and a stronger lead into the next bull market, because of course the combination of institutional support, strong infrastructure, global awareness about Bitcoin and stabilized macro conditions, faster cycle dynamics suggest that while a bear market is likely now, it could hit faster, harder, but recover sooner. So quite a few things to consider with Bitcoin, but also this can be quite supportive of bullish continuation from here as well. So for those commentators and market analysts which are talking about Bitcoin continuing up in 2026, then these potential resets on the RSI, essentially where we are when bull markets kick off, could be an indication that even though over the next few months Bitcoin may have a nice reset, we could be continuing on our way in 2026 quicker than we think, and the bear cycle may come and go before we know it. So food for thought, but that's Bitcoin monthly log scale.
Hi there, I'm James. I'm the founder of ArcisFX. I'd like to personally invite you to join our 24/7 trading group. This is built for traders who want an edge. Inside, you'll get access to live calls on Forex, commodities, crypto, energies, and metals, along with exclusive daily analysis designed to unlock your trading potential. And this in both traditional and now in digital markets. I'm talking Bitcoin, crypto, altcoins, and tethered currencies. You'll gain early access to insider news, real-time updates, real-time support, and premium educational content. If you want to sharpen your skills and boost your success rate, then join me and Paul in this community. This is a fast-growing community of traders who are now writing their own success stories. So don't wait. Join up now. Your edge starts right here.
But just to check in, of course, with our monthly chart and this perilous candle, which we've been seeing below this primary trend line, which had been intact since 2013. There it is, that's 2013. And unfortunately, we have never had a wick which has gone below it. And unfortunately, we have that now. Regardless of whatever happens with Bitcoin, we now have a wick below this primary trend line, which of course isn't a confirmed break, but it is a significant bearish signal. And that's of course because we couldn't hold 89K. And now if we go into December with the price action stuck below 89K, we are almost guaranteed to have a candle body close before the year is out, which would then be the full-blown confirmation that this primary trend line has broken and that more downside is ahead. And of course, the next line in the sand following this is around 65K. But for a little bit more short-term approach with Bitcoin 3-day, and that's quite funny, short-term, but compared to the monthly chart, we have lost 89K. We currently seem to be trying to put in a bearish retest of that previous zone, including the cloud. We've gone straight through the cloud. We haven't bounced at the bottom of the cloud as what has happened previously. Again, we're really struggling to find some bullish signals here with Bitcoin, as even this narrative, this cloud perspective, this cloud predictive, essentially, where we have the price action retraced at the bottom of the cloud and then continue upwards, well, we've lost that as well, which is another bearish signal. So right now, 74K is the next line in the sand, and below that, of course, is 49K. Now, do I expect the price action to go below 74K at this point? Yes, it's very possible, but it's more likely that this range, essentially, which starts at 74K, going all the way down to 69K, essentially the previous bull cycle's top, is a more likely retracement area for Bitcoin. So we could see something like this, and then we can find our feet in this area and then move up from there. It would make sense to have a bit of a recovery move from here and maybe come all the way up to 98K and retest these key levels. I'm not sure it's going to go all the way up to the daily 50MA at this point, but that could happen. But I think a recovery bounce of some sort, a further move up before a further move down, is quite likely at this point. So maybe that is something we should be expecting from here before we move down. But right now we are stuck in a range between 89K and 74K. And of course, this is the area which we should now be trading unless we see something different. But before we go, let's just check in with Bitcoin's key levels to watch this week. Now, it's a bit of a complicated picture, I have to be honest. I had struggled a little bit today to try and isolate local support, major support, local resistance, etc., because it's quite a challenging picture on different time frames. So I've done my best to quantify what we're seeing with the price action to give you the best summary as I can. Now, this is Bitcoin 15-minute chart. So as you can see with Bitcoin, we do have these minor support and resistance areas, but aside from 89K, they're not particularly relevant on the higher time frames. Now, Bitcoin on the 50-minute chart obviously mostly is whipsawing around. Yesterday, the price action started to form this ascending triangle pattern. We then broke down and formed this very gentle support line here at around 85,352. And then we broke all the way back through the pattern just to tap resistance at 89k, which is very major resistance on the higher time frames. Got rejected and then again fell out of the pattern, and we're now in this channel. Now you might be thinking, well, we can trade this channel, but if you do get a breakout, you're running straight into resistance, and then you've got 89k up above like that. So there's maybe a move there, and you've got something to trade off, so you can draw this channel on your charts. But ultimately, this is a battle where the focus should be on the higher time frames at the moment. As you can see, this is very challenging price action to trade on the lower time frames. So let's just switch to this chart. Now this chart reflects where local resistance actually is, and this is the 2-hour chart, and we have local resistance between 89k and 90k on this chart. And that's pretty standard across multiple charts at the moment, and there's that rejection we got yesterday with local support sitting around 82 to 81k. So if we can't break above local resistance here, 89k being a very significant level, then you expect a move back down to here. But of course there is more going on the higher time frames. So let's switch to the 2-day chart, which gives us a clearer picture. Here's local support between 81 and 82k. You can see it's acted as support for the price action previously, and then we have major support between 73 and 75k down here, which is kind of reflective of this little dip we had back in April. And of course these previous all-time highs, this whole area of course is forming this support zone. So if Bitcoin does manage to break above local resistance of between 89 and 90k, we also have mid-level resistance at 93k. You can see here with this dashed line, you can just see how the price action has bounced off it previously. And then of course, if Bitcoin does manage to make it past 93k, we then run straight into major resistance at 96 to 98k, which is made up of this point of control, making it very difficult for the price action to get it back above it. And of course, right now we are sitting pretty just below local resistance, just below 89k. So unless we can move above 89k, we're coming back down to local support, of course, but that isn't particularly strong. And bearing in mind all of these red candles, so if we don't start seeing a reversal pattern forming at local support between 81 and 82k, then of course major support is next, and that's probably the most likely place where we'll start to see a reversal. Now we could have a recovery bounce from here just to check these key levels. That's perfectly possible, but right now the bulls are really struggling, and these are the key levels to watch. But that's it for now. I'm Paul with ArcisFX. Don't forget to like, subscribe, and drop us a comment. I'll be back tomorrow with a members only live stream with James, so if you're not a member, consider joining. It's only a couple of bucks, I think. And then I'll be here on Thursday for altcoin gems and Friday for my weekly live stream where you can ask questions, get me to check out tokens you're thinking of trading, and see how Bitcoin is doing at the back end of the week. Also, if you're not already in our private group, you can check out the link in the description, as we'd love to have you. Catch you in the next one.